Welcome to Private Equity Landscape 2022 and beyond. In 2022, how have Cayman Islands private equity products held up, and what do we expect to see over the course of 2023? We'll look at fundraising first, and then we'll look at M&A activity subsequently. We look at fundraising. Global funds raised to the full private capital sphere reached 1.2 trillion in 2021. This was a 14% increase from 2022 and the highest level reached to date. If we look at buyout funds specifically, they raised 387 billion in 2021, and this was the second best fundraising year ever. Also, growth, venture, infrastructure all grew faster relative to their 5-year averages. What this demonstrates is that investors are still keen to invest in private equity, and this has been reflected in the fundraising pace and the activities that we have seen in the Cayman Islands through 2022, building on what has happened in 2021. We look at the private equity industry's household buyout funds. They historically would raise a large flagship fund every 5 years or so. Now, within our practice, we're seeing that time frame shortened so that large flagship funds are being raised every 1 to 2 years. All of this shows confidence remains in the private equity industry. And not only are we seeing funds being raised on a more frequent basis, but excitingly, they're also larger. This has great ramifications for the eventual downstream M&A activity that will flow from the fundraising. More frequent fundraising, larger size funds, this is impacting the level of activities that we're seeing within our practice. If we move forward to 2023, every time you turn on the news, we're hearing about inflationary pressures, we're hearing about the threat of rising interest rates, the impact that this is having not only on business but on consumers as well. But with these volatile markets, potentially comes a lot of an opportunity for our private equity clients. Volatile markets are an opportunity in particular for distressed managers to embrace market conditions. And so looking into 2023, recessionary activity, very evident. We expect to have a lot of business within our practice, but also globally as well. So that segues neatly into M&A. The M&A market has seen a slowdown in private equity deal making. And as I've mentioned previously, not only have there been inflationary pressures, not only has there been rising interest rates, but of course there's been the lingering effect of the pandemic and of course the war in Ukraine. Not to mention, in addition to that, lenders have a limited appetite right now to provide traditional debt financing. And in fact, it's quite possible that traditional lenders are looking to offload some of the commitments that would have been signed up prior to the war in Ukraine. But all's not lost. In place of trademark M&A activity, there are still other options that are open to private equity sponsors. So for example, if we look at our practice, we have been seeing and therefore expect to continue to see more continuation funds being raised, more fund-to-fund transactions, and also more take-private transactions. We recognise that take-private transactions may be very attractive to sponsors given the depressed public markets and not so attractive to the boards of public companies. But nonetheless, we do anticipate that take-private transactions will feature quite heavily in 2023, and those private transactions will traditionally involve a key element of Cayman entities as part of the structuring. So let's look at 2023 from an M&A perspective. In place of trademark M&A activity, what do we think we may see in 2023? Based on what we have seen in 2022, we would anticipate more continuation funds and also more GP-led fund-to-fund transactions. In addition, more take-private transactions. Take-privates are quite interesting when you look at it from the perspectives of the sponsor and also the perspective of the target. From a sponsor's perspective, given the depressed public markets, take-privates are a highly attractive proposition. From the public board's perspective, they may not like the idea of being taken private given the perception of undervalued stock. Nonetheless, we do anticipate that there will be more take-private transactions, and all of the types of transactions that I've just discussed will feature Cayman Islands entities as part of the structuring. Let's continue with our predictions for 2023. What sectors do we predict will experience increased M&A activity? Inflationary pressures, labour shortages, and general supply chain issues may create a preference for targets with strong balance sheets that counter these pressures. For example, healthcare, the energy sector, and growth investing is also likely to continue to generate significant interest. So the overall landscape for 2023, positive or negative? Private equity thrives in the times of volatility and distress. We're currently in the midst of a major perfect storm. This will create opportunities in particular for distressed funds. It will also likely lead to interest in structuring and restructuring, similar to what we all saw post-2006 and 2007. So we predict that 2023 will be another positive, albeit also challenging, year for private equity. So let's talk about SPACs. Are SPACs and de-SPACs still popular? Although the SEC took some of the wind out of the sails of SPACs, the structure is nonetheless now an established feature in M&A. Total SPAC capital seeking acquisition stood at $154 billion in November 2021. This was equal to approximately 11.7% of global private equity dry powder. So whilst we're not seeing the flurry of activity of SPAC formations that we all saw in 2021, that availability of dry powder suggests that SPACs will nonetheless continue to impact the private equity landscape over coming years. Regulatory developments have been a key focus for the Cayman Islands over recent years. How has this affected private equity? And is there anything on the horizon in relation to the Cayman Islands? We recently had the introduction of the Private Funds Act. Private funds in the Cayman Islands are now regulated like hedge funds in the Cayman Islands. This was a change that was driven by the requirements of the EU and is a change that was in line with the EU's desire to see global regulation of the private funds industry. In terms of future changes, we anticipate that there will be updates to our exempted limited partnership law, which will enhance the flexibility of an already very user-friendly structuring vehicle that's substantially based on the Delaware equivalent. The lion's share of Cayman Islands private equity funds are structured as exempted limited partnerships, and so we know that the changes that are proposed will be very welcomed by our sponsor clients. Currently, macroeconomic and political volatility have been running riot in every region, and yet the US dollar is strong. What are our clients using the Cayman Islands saying about outlook and strategy, especially our US-based clients? Investors have reaffirmed their appetite to continue to invest in private equity. We have seen this reflected in continuing fundraising mandates. In addition to traditional investment strategies, growth investment has rapidly emerged as one of the most dynamic segments of the private equity industry. Digital technology has forced growth, equity, and late-stage venture capital to the forefront over recent years. If we look at a number of the industry's top buyout firms, including Blackstone, Bain, TPG, KKR, these managers have all launched large growth funds, and no doubt other top buyout firms will follow suit.